Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. The 19th of January. First of all, sorry I'm a little bit behind here. I just have a big windstorm going on outside, and that kind of slowed me down a few minutes this morning. But I think everything's okay. Good morning, Win. Oh, and I just turned on the robots. You're supposed to remind me to turn on the robots, but I already did it, so you don't have to do it today. But I turned them on here. There's still, some of them are still loading. Well, actually, Joseph actually would have gone long. Well, okay, whatever. I might need to look at him and make sure that he doesn't trade too early into the session. Well, we've got a lot to digest here, so let's get over to the charts. Well, so we had a pretty ugly down gap over the weekend. And there was some, how do you say, drama. You can kind of see this little orange bar. I guess in the larger scheme of things, it doesn't look too big. But at the time, it looked like a big deal. A little bit of drama over at the Capitol. A fire underneath of a bridge by a homeless camp led them to lock down the Capitol, but ultimately turned out to be nothing. But the robots and traders definitely reacted to that, provided a great buying opportunity, huh? And then here in the overnight, action is just like crazy back up, and we're kind of back up to where we were. I guess we're not at all-time highs, but I have to say that's a pretty impressive overnight move. Now, when we come over to the treasuries, bids are becoming, having a hard time holding it, and we have had a move down, but basically back to where we were on Friday, so... And then let's go through some of the other commodities here. Oil's still looking good. Man, all of the analyst estimates on oil just look great. And I think the chart looks great and the order flow looks great. And it seems like oil is a place to be right now to me. Same with gold. Even though gold continues to struggle, I think that the future macroeconomic framework could be favorable to gold. And we can see after some drama over the weekend that they are recovering and they're holding this 1830 area pretty okay. Copper continues to go sideways, but looks like a good consolidation. I should add that there was a number of miners reporting. Rio Tinto, a big mover this morning off of some of their earnings reports. It looks like the mining complex doing well today, so I think we should keep an eye on the price of copper up today, yeah? Here's the dollar, and you can see the dollar almost made it to 91, but not quite, and is coming back down. So that might be a significant turn. We'll see. But the basic gist of it is that our setup today is looking fairly bullish, although I've got to be careful. The buy overnight and all of that, we're likely to see some mean reverting behavior first, right? I read this over on Barron's that the Saudis are helping to fund our electric car research. I have not gone Googling to vet this info yet, but that would be weird of them, yeah. Well, I suppose that it would be smart of the Saudis and any other large oil producing company to invest heavily in electric car research, because at this point it seems pretty clear that electric vehicles is going to happen one way or another. It is going to impact the demand from oil, and this would be a great way for those countries to hedge against that eventuality. The problem with that one, though, is where can you invest these days in electric cars that's not already overbought? Well, depends on whether or not you think Tesla is overbought, doesn't it? But that electric vehicle, that whole market segment is awfully crazy these days. All right, let's pull up the text-to-speech here. Oh, come on. Oh, it's not quite done yet here. There we go. Okay. Now, so coming back over here to the Treasuries, I'm noticing that we're having a little bit of an up move here so far today, which I guess is good for equities, but I suspect may turn back down at some point. London Metal Exchange may permanently close iconic trading floor. What a shame. It is my opinion that a open outcry trading floor is more fair than an electronic market, and that we should try to keep those going. But oh well. Okay, so it looks like one of our robots did decide to take a long here. Oh, actually, Indy is going short. Indy is going short, and Squire is long. And Joseph never took a position, but I think they would be long. All right. Let's see here. What else do we got to go through here? Oh, yes, that's right. The next thing that we need to do is we need to go and look at Goldman Sachs earnings results. I know that they were higher than expectations. Goldman's earnings stimulus hopes. Yeah, there we go. Goldman Sachs crushes analyst estimates on stronger than expected banking and stock trading. So those are both really good, but I want to know more about their consumer segment. Bank posted earnings of $12 a share, crushing the $7.47 per share estimate of analysts surveyed by Refinitiv. Oh, I've never, that's the first time that I've seen them post it like that this is where we got the analyst estimate. I'm going to go research them. Shares of the New York Bank jumped 2.4% in pre-market trading. We were able to help clients navigate a difficult environment and, as a result, achieved strong results across the franchise while advancing our strategic priorities. We hope this year brings much-needed stability and respite from the pandemic, but we remain ready to handle a wide range of outcomes and are poised to meet the needs of our clients. Expectations were running high. Equity traders produced a 40% bump in revenue. Good job, boys. From a year earlier to $2.39 billion, outpacing the $1.89 billion estimate by roughly $500 million. Like most of its rivals, fixed income operations missed expectations for the quarter, producing $1.88 billion in revenue, below the $2.06 billion estimate. So this is something I want to point out to you guys, and we've talked about this many times before over the years, but your returns are very much a factor of the market that you are trading in. If money is coming into your market, then trading tends to be easier. And if money is coming out of your market, trading tends to be more difficult. And what do we have happening right now? A lot of money is coming into equities, and money is kind of coming out of treasuries, although it's kind of slow over there in treasury. So the fixed income guys not doing as well, and the equity guys doing really, really well. And here is where Goldman is really good, and this is where I feel like that my knowledge of the industry and having worked there is a little bit of an advantage, is that I know that in this environment, Goldman is going to do better than the other banks because they have better equity trading. Let's continue reading. Investment banking rose 27% to $2.61 billion, exceeding the $2.15 billion estimate on higher revenues in stock underwriting and completed mergers transactions, the firm said. Okay, so that one is a little bit more nuanced because on the investment banking side, Goldman Sachs tends not to do as well as some of its peers, like JP Morgan and Morgan Stanley, I would say. And it appears in this instance that they did well because of stock underwriting. That we've had a really hot IPO market. So I don't know if that in and of itself tells us anything really great about the company, but we were expecting strong performance, but Goldman outperformed in almost every business line. Goldman's activities are squarely focused on investment banking and trading, areas that did well everywhere, but especially at Goldman. Okay, but I don't see anything about their consumer shares. Let's see if we can just find Goldman investor relations, maybe where we can get that report. Here's the 8K. Net revenues. Okay, consumer wealth and management, 13% of revenue. This is the place that they're really doing a lot of investment, and I want to see how they're doing on it. But I think we need to have the more. Okay, here we go. Asset management. Okay, so asset management itself, not too much more than last time around. Actually, net revenue's down, and that appears because of because they're not making as much in their equity investments and lending debt investments. Oh, that's interesting. Okay, but over here on this one, oh, that's a really okay. So wait, what kind of a jump is that? Oops. %. That's not bad. Not bad. And where is it coming from? Where it should, the management and other fees. Private banking and lending not really having grown a whole much. So I would really like to see that number rise. I want that to be, a 4-digit number next time, Mr. Goldman Sachs. Watch out for the boss you don't see. Yeah. Did you get your programs debugged? Finished all of your reviews yesterday? What did you? Oh, yes. It's a good question. So I continued to backtest it. I tell you what, backtesting over the whole ETH session is slow. I think that there may be a way for me to get volume profiles sequentially without doing tick replay. Maybe, I don't know. The first thing that I realized was that trying to optimize that strategy with the current equipment that I have is not realistic. I won't get very far. So I ran the straight setup that we had where we were looking for a jump in the profile in sync with a moving average. That came out to be basically break even. It was 0.98 profit factor. So it wasn't profitable. Worked out though. So that says to me that there is definitely, well, I mean, that's kind of what I expected to happen, to be honest with you, is I think that there is some base edge to the volume profile, but that it is so popular that it's not going to be like something that you can just straight learn volume profile and then you're going to be a profitable trader. That opportunity is already gone. That, as is the case with almost everything, if it's out there, you're reading about it in books and so forth, the edge from that has probably already been arbitraged away by the market. But if it's break even, that means that at the very least, you don't want to trade against that. So if you're coming into a situation where the market is on a step in the profile, you want to be careful about how you trade it, because if it breaks out, you're going to get creamed, right? So then I went and I did make one update to it, because we were looking for like a jump in the profile, right? Or a step in the profile. So I also changed it so that when I look at this step, that the two steps, if I'm going long, then the two steps below the profile should have more volume than the one here, so that I'm getting that bell shape curve. And I just did it off of the two prices, and that eliminated maybe 20% of the trades, but it didn't really affect the profitability of it. So that's basically where we're at. I think there might be a way to, maybe there's a way to get, maybe there's a better way to do it without tick replay, but I'm not too sure. The issue is that I think that the way that Ninjatrader gets that volume profile without using tick replay, when you use like the built-in volume profile, is that they're getting it from the whole session. And I don't think that there's a way to do a sequential profile like we would need. So, yeah. Now, I need to look through here. I didn't really look too much at the news. I know that we had this 6:30 Canadian news. We got some bill auctions later today. Okay. And I guess a pretty big iceberg there at 24.5. So it looks like they are trading up there. So I've been reading my book and I'm pretty much almost done. I've just got like 2 chapters left that are kind of more of the like consequences for like regulators and exchanges and so forth. And they were pointing out that the reason that these profiles get created is because there's these guys that want to buy it through here. Actually, I should draw it, because the volume profile that we got right now, I think, really shows it well. You're going to have these people, they're willing to buy like this, right? And then there's these guys and they're willing to sell like this. And so we end up with this area here at 88 where the liquidity is not as good, where they're not willing to put up as many contracts like that. And so when we're getting through here, the liquidity is down here and up here. There's going to be higher liquidity, which means that there might be some propensity for it to mean revert through this area. But also, I think that these areas right here are going to be better indications of what the order imbalance is. So that's why I'm coming over here and I'm looking at the Treasury, and based on that theory, what we see happen here at 24.5, I think, is important. And in this case, we saw a lot of trade. We saw 7,000 contracts sell into 24.5 and them hold it. Now that kind of does set up a level break trade, but I think that if we get a situation where that buy side demand diminishes at 24.5, we could have it move down. So I think we'll keep my eye over there. I'm not so sure that I'm going to take a trade off of that. Okay, Apt C Arui Gija? Man, I know that's an Indian name, but I don't know how to pronounce it. I'm sorry. Wait. The robot will know. That robot will know.
Aptiari Giga says, how do you calculate risk in TP at Ninjatrader?
Aptiari. Okay, so so here's the thing. When I trade for myself, my manual trades, I am always taking a manual. I'm always placing them manually, right? So I'll put one there at 87 in case they come back down to that side of the profile. Once it hits that, my automatic take profit is going to come in. So I have these different strategies set up. Actually, I should double check which one I've got. Yeah, okay, I've got the right one. So I have automatic stops and targets that will be set up. And I'm basing those numbers both off of what the average rotation is in the S&P 500, which at the moment it tends to be around 16 ticks. And what my backtesting results suggest are the best stops and targets to use. And that's how my robots decide to do it. But I'm always taking like set targets and stops. I might get out of something early, but generally speaking, I want to just take it and wait for it to hit my spots. So that's how I determine it. And once I'm in a trade, if I'm going to really manage a position and take multiple contracts and stuff, it will show me over here on the left how much I'm making at each price. And I can use that information to, manage my position, because I know how much I make or lose at any one price, and it will tell me what my average price is. And then as I take profits, that gets baked into the sides so that, I can see that because I took profits, my break-even point is much further down here and that sort of a thing. So that's how I do it. I know that's probably not the answer that you wanted, but all of the backtesting that I have done suggests to me that the best way to get in and out of something is to have good signals that get you in and out. If you have it's something that is really rare and you get in on it and you wait for that to get out, then you will miss exit signals. So for exit signals, you want to have things that are like relatively common, but still give it enough room to breathe. So there's kind of a real difficulty with managing your risk that way. So then the next thing is to just use the straight risk reward is the next best thing. I've tried things like trailing stops and so forth, and at least on the time frames and the strategies that I have tried trading, it's not very effective. So yeah. Anyways, what was the other thing? The other thing is I got this really great quote out of the book where they were basically saying they were showing. So this is something that I had not considered before. I think that we were kind of, good morning, Gary, how are you? Maybe you'll find this interesting because I think that we've kind of touched on it before, but when they went through and they showed the math of it, I was like, oh. So here's the thing that they showed that I think is interesting. There's a lot of focus in the academic literature on something they call the square powered law, which is that how much does the order flow react to a large order, and the way that the market behaves from like they will just watch the market and see what the properties are of this, and it follows a squared power. So it looks like this. It's like this. So the order, it gets really big. It increases exponentially, but there is a certain point at which there's an order is big enough, and it being bigger doesn't really matter quite as much. So that also kind of leads, and this is kind of like with meta orders. So this kind of leads to this situation where if you have a really big buy followed by another big buy, this second big buy doesn't affect the market as much. But if you have a big buy followed by a big sell, that's in the opposite direction, essentially, then what happens is this sell actually ends up impacting the market more than this buy. And, it's it scales. So even one lot will have an impact on a market in these models that they're doing, which kind of suggests that if you come in and you buy something and then you sell it to take your profits, that the net impact that you have, that you have from the buying, gets canceled out by the selling, and that impact is about equal to the spread. So in other words, the actual cost of you making the trade in net takes it to where you're not going to make money, right? That the net cost of the trade cancels out the potential edge in it from just the noise. And so the conclusion that they made was that there's no reason to trade unless you have a predictive signal. Now, that's kind of interesting that when it's like that, that kind of would show how spoofing maybe kind of leapfrogs that, right? Because they don't actually have to buy. They just have to make it look like they're buying, and they create that impact, and then they actually sell it and create that opposite impact, and then that it goes for them. And so they actually are kind of cheating the market. Oh, you're going short there? I actually just took it long. Actually, everything I have is taking it long. No, I take it back. Indy went long. Oh, wait, hold up. Brandon's got an issue here. Maybe it's not a big deal, but the ES version of the strategy went short and the MES version of it went long. Well, why am I all colored up? I wear this shirt all the time. I wear this shirt probably at least once a week. I think I want to update my wardrobe, though. I feel like I wear too many t-shirts, and I want to get back to wearing collared shirts on stream more. So I want like collared shirts that aren't like too formal. So I'm looking for like athleisure style ones, like from Lululemon and stuff. It's concerning. I don't want to have to shave and put. Well, I feel like that, coming on stream is kind of like a job, and I'm thinking like, probably we should put our best foot forward for the new people that come in. Yeah. Get some sexy yoga pants. Yes. I have some sexy yoga pants, actually. I get those from Virus International, though. Oh my gosh, these guys! Let me tell you what if there's anything that clothing wise that like gets me going, it's every day when I get the promotional emails from Virus. Where's the last one that I got here? Here we go. Can you believe it? Bolt bundles. Oh, we're going to get some numbers here. So the thing that they got now is they got these bundles, so you can get a shirt, the track pants, and underwear, and socks. So you get 4 items for $100. And I'm like, oh, that's freaking awesome. Seth just wig up, make up, and shake it for the stream. You know what? Like, I wouldn't be opposed to wearing a toupee, but I am opposed to buying a toupee. Maybe we can set up a P.O. box. You can send me a toupee. But I would just feel too dumb buying one. But if I had one, I would wear it from time to time. Anyways. So yeah, every day they'll come in with, it's like, oh, we got this new thing. So you got all these 4 things together in the Bolt bundle. That's great. There's also, they got a new sports bra, which of course I'm not going to wear a sports bra, but I look at them and like, I know that all the girls at the weightlifting meets and stuff are going to wear them. And like, I get jealous because I'm like, oh, those look so good. How come people don't make guy stuff that is that cool? They don't. I want to be, I want to get the attention like, nah, it's not a thing. Not a thing for guys. I discovered yoga pants when I began taking yoga years ago. I haven't always looked like I am ready for a workout. I haven't taken a class. Oh, I always look like I'm ready for a workout, but I haven't taken a class in years. There you go. Yeah. Well, the reason I like these guys is that they have the best compression. So these are their compression shorts. So if you want, for weightlifting, it's great. There are some studies that suggest that there are advantages to compression gear. So you're one of those men who look natural without hair. Some guys look like they need hair. You don't. You also look like my sweet brother-in-law. He's bald, and also almost all things. I honestly, I don't think that I'm necessarily objectively smarter than other people. Maybe in certain ways. And there are certainly things about how I think that is different from other people. Especially when I'm on the medication, and you add the highly logical factor on top of that really changes things. But I think that you might just feel that way just because that's what you're used to. I bet you that what would happen is if I put on a wig, you guys would all think that it looks wrong. And then I do that for a year, and you get new people in. And we don't tell them, okay? We don't tell any of the new people that I'm actually bald. And then, we do that for a year, and they're used to me having hair. And then I'll take it off, and they will, it'll cause problems for them because they'll think, oh, well, you looked better with the wig, and that's what their expectation of me was to have hair. I do think that I look better with it bald than when it was thinning, and I tried to keep it long. So you have pattern recognition. Sure. Well, I think so. Here's the thing. Going back to what I was talking about before. So this book suggests that there's no reason to trade unless you have a predictive signal. So I took a trade. Do I have a predictive signal? I'm not sure I have a strictly explicit predictive signal. I have a number of predictive signals that over long time periods appear to have some edge. They're actually a little bit in conflict with each other right now, so I don't know. But I also believe that we kind of have a macro framework and everything else set up to be long. And it was in a spot within everything else that I know about the order flow that gives me an okay buy. And as you can see, we're still kind of just like a break even. So that says that I was right about that area. So I suppose you could say that I do have a predictive signal, but we're not really sure because we're making a logical decision about what we expect to happen based on what we know about the trading environment. You also have critical thinking skills. Well, that's not a natural thing. That's just from a result of being a programmer. You're right. Most people don't have those kinds of skills because most people don't work in like an engineering job. So this is why you get a lot of problems in politics. So you'll notice that the way that people that are like engineers and mathematicians and so forth think about politics is really different from how like an artist thinks about politics. And a lot of artists have a hard time differentiating the emotions from the facts, Anyways, Where was I getting it? If I send you fine wigs, we could try the invisible gorilla experiment. I've watched videos where a clerk is checking someone out and they switch out clerks mid-checkout and the customer doesn't notice. Oh man. So this is the one that's weird to me. As somebody with ADHD, I will very often miss things because you don't have control over your attention. So you could like get distracted by something and like just completely miss it, right? This guy, hi. That's a new name. But with that gorilla experiment, I tell you what, when that gorilla came across the screen, I'm counting the ball going around, and I'm really meticulous about it. And then this gorilla walks across the screen, and I'm like, what the heck? And nobody else in the classroom notices, and I'm like, like myself and like 5 other people in the classroom raise my hand and everybody else missed it. I'm like, are you kidding me? How did you not see that? That one makes no sense to me, but because I would have thought that as an ADHD person that I would miss it, but I don't. So anyways, the thing that you made was pattern recognition. So maybe there is some pattern recognition, but I think the thing that matters here more is I think the thing that you got to do is you need to be able to make a model of what you think future order flow will look like based on what you know about the conditions and other participants in the market. So I know that because of the way that different macroeconomic instruments are moving right now, the dollar getting weaker, treasuries overall moving down, and a pretty big move up in the ES kind of combines to a situation where the majority of market participants, I think, are going to be prone to buying. And we've got earnings coming in, and some, their earnings for the companies that I look at are good. And I think that there's going to be a lot of people buying into it today off of earnings. Yeah, ES moved down to 37.86 with some selling, 86 held. That was annoying. Yeah. So I was just, so when Ace took a short there, right? And it doesn't look like it's kind of not going anywhere yet. When he took that, the immediate thought that I had was, well, we had a pretty okay move down, so I understand why he would maybe want to go short. But that move down looks like just random noise that didn't appear to have any real informed. That didn't look like informed trading coming through. Yeah. So that's where I'm kind of like, well, if we're not as actively seeing informed trading and our longer term bias is up, then this is an okay place to buy. But we'll see if it actually works out, because I don't know. My predictive signals, the ones that I actually have like historical data on, suggest are in conflict with each other right now. About a month ago, didn't we see companies moving money into funds so their year-end profits were better for their bonus plan? Well, so you're talking about like year-end window dressing type stuff, and you will see a lot of, maybe you kind of see both of it. One is companies will kind of manipulate things to make their earnings look good, but then you will also get funds buying the companies that are good, so that when they show their financials at the end of the year to their investors, they look as good as possible to say, oh, you see, we were in the ones that moved well. Ace says, oh, great, that was information I could have used 10 minutes ago. Well, I mean, from my perspective, I know that even if I tell you, it probably won't influence you, right? My observation is that if I say something like that, it doesn't influence you. That's why all I did is I said, well, I just went long, so we'll see what happens. But it kind of doesn't look like it's going anywhere yet, does it? We are getting to the point where normally we would start to see a move here, right? So let's see if it's long or short. Oh, we should check Bitcoin. Okay, so Ethereum is trading at an all-time high, and I see that Bitcoin is still a little sad. Although, am I getting... Yeah, okay, I'm getting the data incorrect. I've had some problems with that Bitcoin chart, so I should probably have this open. Today's ES move at 0.9. Are you're talking about the VIX so far? Okay. So yeah, I want to explain this again because some of you guys are here now, but the big thing that I was reading off of my book is that they are suggesting that well, so when you look at this profile, we sit down and we think, well, it's random and they want to trade in this area and there's some value in here, and so here's the value area and that's why you get this bell over it. But this book and the market microstructure guys believe that this distinctive shape is caused by the square power law, which again has to do with the impact of meta orders on trading, whereas a large order has a exponential impact on it like this, and then after it goes, the time decay is like this. But then if you trade the other way, it's like this, and it actually has a bigger impact going down on the other way. So you get when you start modeling this out, you get this group of people that want to buy it right here like this, and you get this group of people that want to buy it right here like this, and you get this balanced. You get this price right here at 88 and a quarter, and that price will trade back and forth a lot because that's the point at where they kind of equalize. So all of the people that are willing to put orders out there have already done so. And so you don't get a lot of liquidity. You get less being put up in those areas and traded in those areas. And so you kind of get this little, eventually you will get a dome, but especially initially, you're going to get this kind of like M shape is what I've noticed. The book is called... I have to pull it up for you. So I have it on a PDF. Gotta warn you, this is a really complicated book, and I don't understand everything that's in there. It's called Trades, Quotes, and Prices, Financial Markets Under the Microscope by Jean-Philippe Bouchard, Julius Bonnard, Jonathan Donier, and Martin Gold. And, here, what's the spot where I found it? Where it talks about this down on, page 18, I think. Or chapter 18? Yeah. Getting close. Yeah, right here. So here they're saying that in order to see the square power law, you can't just look at the liquidity that's out there. You have to model what latent liquidity might be out there. And when you start modeling the latent liquidity, you get this sort of thing, right? These are the buys and these are the sells. These are the buys and these are the sells, right? But then this is like the actual marginal liquidity. This is what they actually see in the markets. So that's why I was looking at it and I was going, okay, so you might not necessarily be based on the profile, but it is a related thing that there's going to be a price in here where they're not going to put up a lot of liquidity. And in the treasury, it's really obvious. In fact, did you see it? We used that to call it over here. So we said, okay, so what actually happens on the edges is going to matter more. Essentially, is what I'm saying. Is like in the middle, what happens is you look at, I have often looked at the middle and I've said, okay, here's this balanced area. So are they doing more buying or selling here? and then trying to use that to determine if it's going to break out higher or lower. But what I'm realizing now is that the overall liquidity is actually here and here, and this middle spot behaves the way that it does because there's just not as much liquidity there. So for me to really know what the larger players are trying to do, I probably want to pay more attention to these edges. So that's why I realized, okay, there was a lot of trade up in here. So if they were to come back through here, that might be all of the buying that they want, and they might come back down through the other side, and they did. So I think this is going to be a theme we'll watch a lot more and see how that affects our trading. Have you taken Jigsaw's advanced order flow training? No. So when I bought Jigsaw, they didn't have any of that stuff. I have what is equivalent of the most basic package that they have. I think that there is some training included in the most basic package. There's also a lot of training that you can watch on their YouTube channel, and I've watched all of that, and I think that helped me understand order flow. Although I would say that I've learned so much from reading academic research now, and I think a lot of traders would do themselves a real favor by reading more academic research. So in terms of like, should you buy the higher packages? If you don't know anything about trading or order flow, then perhaps one of those advanced courses would be beneficial to you, but they're not necessary. And so I would say that for the vast majority of people doing this, that you should probably just get the basic course and start trading. And then if you really feel like you don't understand things or you need more information, maybe you could go and sign up for a course. Trojan Scopes, how many trades did you manage to get in through your script yesterday? Yes. So let me go over that again. I back tested it over the full year, and over the full year, it took about 5,000 trades, and it came out unprofitable with a profit factor of 0.98. So I'm going to say that it was within the range of break even, which suggests to me that there is something to taking a trade at a step in the profile, but that it has that the most simple and naive way of approaching that has already been arbitraged out. Now, if you got something like that is break even, and then maybe we can combine it with other information, for instance, something we have that is extremely predictive of a strong trend starting, then maybe the combination of those things would work out well. But those are like really hard to backtest in some cases, right? Oh, wow. I know nothing about order flow, but I would like to learn. You have the $500 voucher. Oh, good job. Good for you. Well, so let me just show you here really quick. So where's their little thing? Yeah, here we are. So here's the thing. Okay, so I basically have independent, right? There is this institutional one where this is like if you are working for a actual trading company and they're willing to pay for it, that's what this one is for. Otherwise, you probably don't need this. And you can watch videos where Peter talks about this, and he's actually talked people out of buying this one, his own product that he makes money off of. So the institutional one, you don't need that one. Okay. This professional one, this is going to have like your advanced order flow trading. So this would be like your basic start, or, you know, if you wanted to buy training, then this is where you would go. But now the stuff that I've been talking about market microstructure, and kind of some of the more scholarly research about market making and so forth. They teach you that kind of stuff in the market maker course. I haven't taken it, so I don't know the exact nature of what's in there, and I really, really want to take it, but haven't done it. But it's basically $1,000 just for the course on its own. So, I'm guessing you have $500. Maybe this one wouldn't be for you, so you'll probably be doing better with a professional. If I had the $500, I would probably just buy the year's worth of the live trading license. But that's just me. But I don't know if there's a limitation on how you can use it. Or if you already have that, maybe. If you already have the independent, you already have a year's worth of live trading license, then I would probably get the professional. But good for you. So you won that contest for the that they got going for the webinar on Wednesday, is it? It's the 21st. So yeah, Wednesday. Yeah, man, that's great. That's good. Hi, Seth. Good recovery. You're now COVID immune. I think I'm doing okay. I still get this thing where you could maybe get a tickle in your throat, and so you cough, and you'll still get the and then once you start coughing, it's like it gets irritated, and it leads to more coughing. It makes it worse. So I try to suppress the coughing as much as possible. Germany agrees on lockdown extension until February 14th. I don't know. I was reading stuff this morning where people were suggesting that Europe was basically going to be locked down until May. Oh. It was for forwarding an email confirmation for confirmation. This was the third placement. Yeah. Because I am a partner, I guess you could say, I have a link, and if you guys buy Jigsaw using my link, I do make money from it. It helps the channel out a lot. So whenever I see those sorts of things, I just kind of go, nah, it's not for me. So the same with the Futures IO contest. It's they're doing a contest for best indicator, and it's $100 Amazon gift certificate. And I'm well, I would like to, maybe if I had a really great idea, I would go and make something and go and try and win that contest for the prestige. But the amount that you make, it's probably better to let somebody else make it, and somebody new that's not well known become, get all of the fame associated with winning it, Vlad says Friday panic sellers end of day were retail. Well, I think that it was probably a combination of stuff, but there was definitely something going on Friday where it was people just didn't want to be long into the market over the weekend. And you know what? With the way that they opened over the on Sunday, that gap down, I guess you could say that it was probably the right choice. And then you get back in, and, I didn't miss out on anything. Is a Janet Yellen confirmation hearing soon? Oh, I don't have that on my calendar. When is that? Let me go. My news squawk did say when that was. Let me come back over here. What did news squawk say? No, maybe they don't have the time. Oh, it's at 1500 GMT. I forget, that's -7, right? $10 Eastern. So in about 40 minutes. The top of the hour. Oh, I beat you guys. Actually, you probably beat me, and it was just a delay. Good job, guys. Izzy says, I'm curious to see how race-based fiscal policy will play out. I don't know, man. So this is where it gets kind of weird for me, because there are some places where I'm like, oh, that's just okay. So like, for instance, we would give somebody a loan because they're a disadvantaged minority versus, not a disadvantaged minority. Okay, like that sort of stuff's kind of already happening. I'm not so sure that that's like the end of the world. I don't think that the government should be doing it. I think you're creating more problems than you're solving by doing that. But for me personally, it's not the end of the world. It doesn't really affect me that much. So then you talk about monetary policy. So like, how is it that the Federal Reserve is able to craft monetary policy to be more advantageous to minorities? I'm not quite sure I see how that is, especially since it seems to me that the things that the Federal Reserve can do to help the economy almost always ends up helping the rich more than the poor. So I'm not quite sure what it is that Yellen and whoever takes over the Treasury is supposed to do. I kind of suspect that maybe they are just, saying what people want to hear and that it's not actually going to affect anything. Not much affects y'all. Middle management desk guys will bust down on the ground, though. Stuff gets hairy. Well, sure, but like, doesn't those things all kind of hurt people on the ground? Like, especially if like we get inflation and stuff like that. Inflation is a great example. So if the Federal Reserve starts printing more money, or they start giving us more money directly through a cryptocurrency, right? And then that leads to inflation. Anybody that owns a home, that's really good for. But guess what? These people that they're trying to help, they don't own homes. Learn new code words for the new administration. Yes, people like yours are the kinds who vote for $15 an hour minimum wages but don't want to pay for it. I know, right? I gotta tell you what, watching the minimum wage thing is like, oh man. Because there is, I think, I could be wrong, but I think that the minimum wage is an instance in where the reality is just incredibly nuanced. Because I've seen a lot of studies about the minimum wage, and I've seen minimum wage studies about the minimum wage that kind of appear to contradict each other. But maybe when you read some more nuance into it, you realize that they're not such a big deal. So, for instance, if you look at how much more money is floating around there because of a higher minimum wage, or rather what its impact on M2, on what M2 money supply would be, it's almost trivial. I mean, it's not trivial, but like it's less than like the overall money printing that we've been doing. So then that would suggest that, hey, it's, raising the minimum wage, we don't have to worry about increasing inflation. Well, that's not necessarily true. We shouldn't directly tie inflation to M.2 money supply, because we know we've been having that increase a ton and we're not actually getting consumer price inflation. So there's a fallacy right there. But then there's also been many studies on wage increases from states and localities that show pretty conclusively that it hurts those businesses in the short term, and that companies like Uzi's basically lose money off of it and end up hiring less people because of it. Now, I think over time, the cost of living of everything kind of comes up, and then those things kind of even out in the end. But you know, so it's kind of this weird thing where everybody just reads the minimum wage issue the way that they want to based off of their political ideology, and it's so nuanced that it's kind of impossible to really know what we should really be doing based off of the data. You know what I mean? Is he here? He's saying Bank of Canada has done a study on the effects of an increased minimum wage as a net. See, that's where I'm saying I'm going to bet you that that's too broad of a reading of the study. But here's the other thing though that I get from the studies that I have read. It seems to me that the impact from the minimum wage is not strong enough to justify the amount of attention we give it. What do you think? Do you think I'm wrong? We spend so much time talking about the minimum wage. And it seems to me that while it does have short-term impacts on people, that it's not the most important thing going on. It seems to me that you could keep the minimum wage basically where it is forever, or at least track inflation, and it wouldn't matter. I don't think that the impact of it is so strong so as to like all we got to do is change the minimum wage and it solves all the, like it's not like that. Or if they change the minimum wage, it's going to cause all these problems and it's going to be the end of everything. And I don't think that that's the case either. It has a short-term negative impact on some players, and it has positive impacts on other players. And in the end, I think the net effect on the economy is not huge. Everything in the room still goes up, yeah. Well, I am really, now with the minimum wage increase, so then this is kind of where I'm going at, is that like, okay, so minimum wage on its own, maybe not the end of the world. But when you add on top of that, minimum wage, all of the money printing that we've been doing, the desire for them to increase the taxes, which I think is probably will happen. They will raise taxes on some participants. All of these other things. Then I start to get concerned because it kind of looks to me like a perfect storm to potentially create inflation. And it's intentional because we haven't really been getting inflation for a long time. Now, maybe that's not the end of the world either. Maybe they get to 3% inflation and then they start increasing interest rates and it's like no big deal. But I also kind of am concerned that you combine all of that with the extremely high valuations that the stock market is running at the moment. And you're kind of setting yourselves up to, go sideways for years and years because of, alternating cycles of excessive euphoria and hyperinflation and then collapsing and going back and forth. You know what I mean? Does that paint a vivid enough picture for you? Okay, so we are buying off of the open so far. It's an okay buy. Looks like we finally got our target, so that makes me happy. I should have another one like way up here. Yep, okay. Workman compensation costs go up because they're based on payroll dollars. Yes. Doesn't matter. They always pass that. Yeah, that's true. They always pass the higher costs to the consumer. I mean, that's what's going to happen to you, right? Is you're going to increase your costs and you might have to not hire as many people, or you might have to fire some people. You won't be able to hire as many people, but then your business will continue to grow, and after a certain amount of time, it'll probably be break even. Yeah. All right. Another great example here is like taxes. It's like there is definitely this, especially on the left. Oh man, there's a pretty strong down downswing. I think I'm going to try and scratch this. Oh, it's so windy outside. It's making me nervous. Ooh, okay. The Democrats focus so much on taxes. But the evidence that I've seen says that it basically doesn't matter what you do on the taxes, that the net amount of money in the overall economy that gets taxed has been roughly the same for the last like 150 years or something like that. And Democrats treat it like, we need to increase taxes, and then we'll get the rich, you know? We'll, you know. But no, I don't think so. I don't think so. I think you're just kind of like shifting money around in the economy, and like, if you want to solve the problems, then like actually address the actual problems. Like, make it so that it's more difficult for a company like Apple and Google to throw their weight around and make it basically impossible for anybody to compete with them. Make it easier for a small business like Uzi's to be successful. Make it easier for somebody like maybe myself. I don't know what kind of a business I'll open. Maybe I'll open a snow cone stand. That's my top idea. If you guys have an idea for a business that I could open up that you think I would be good at or interested in, I'm all ears, because I need variety in my life, man, and I feel like now is a good time for some sort of new venture, you know. Let's go long. You know what? I got out of my long there. I probably shouldn't have, but just the way that downturn played out, the amount of volume behind it, and so forth, has me a little bit nervous about informed trading possibly coming in. So I'm going to stay out of the market for a little bit. Maybe we'll wait until Janet Yellen. I still think that we're overall net going to be up, but I want them to sort out what just happened there first. But what would I start a podcast about? I mean, I guess I have this, you know, I suppose that what I have here is already kind of a podcast, right? So I think it would need to be a new venture that's not necessarily directly trading. Maybe it should just be the, you know, kind of the expansion out. So like, you know, there was for a while there where I really did the political analysis thing, right? He says, wow, not long. Yeah. Let's let them, they're not just doing that. That's not just happening. There's got to be some reason that they're doing that. So it's a really strong sell after it being basically up, you know? And this is a perfect example of what we were talking about earlier, right? Come over here to the chart. Zoom in really big. Have an overall move up. People are buying. And then somebody sells and it's almost equal. But the impact that it has is much more significant because it's against the flow and everything. So now we have to wonder why the sell. Is it just random noise? Or is it informed trading? And the market reaction and the amount of volume behind it and so forth, because the cumulative delta decreased by about 3,000 on that. You can't see that on this chart. You can see that on this chart. It decreased by about 3,000. Definitely decreased. The market believes, the market makers at the very least believe that was informed trading. And I am definitely on my toes because of it. Speculators that day trading you look like a German brain surgeon. You know what? I don't want to look like a German anything right now. Oh my gosh. Do you hear this thing where in Germany they're going to have like basically internment camps for people that are not following the quarantine rules? The optics of that, and it just, oh, there they go again, them Germans. I don't want to be associated with anything with Germany right now. No offense to Big Toast or any of you our other German friends. Some of our stronger German friends haven't been around lately, have they? Some of our longer term ones. German camps, yes. Oh man, the optics on that couldn't be worse. You really kind of have to wonder what Merkel is thinking. It must just be like a knee-jerk reaction, and afterwards they go, "Oh, I didn't even think that, I would look like Hitler." Oh man. So this is funny. So on the move up, my robots that were short got stopped out, and my robots that were long didn't catch anything. And now I've got some guys that are long. It's close to the stop, but it hasn't touched it yet. We'll see if they survive or not, but I'm going to guess that they're going to stop out, and thus all of those trades all end up being wrong. And thus we see how I end up in this situation where it doesn't matter what I do, you lose money because the volatility is such that it exceeds the stop in both directions. New York kind of steering in that direction too with a bill. Yeah, that's true. But, if they do that in the United States, I think the Supreme Court will smack it down. And people in New York are already pissed off at him. I don't know. In the pandemic, we must protect the healthy by killing them so they don't get sick. Well, like, how bad is it going to look if they do those camps and then you end up getting huge breakouts in those camps, which seems likely if those are the people that are not following restrictions, and then more people die because of those camps, then they really will be death camps, won't they? Biden will copy their ways and send the deplorables now. Try it, Biden. Because these guys in Texas are just want an excuse to break away, right? They just need an excuse. Nationwide unconstitutional lockdown or internment camps, that would be enough to do it for sure. At least half in the U.S. population would accept that if an expert tells them it's necessary and the guy they voted for does it. And yeah, but I think the issue that you get here is that probably the majority is always going to feel a certain way. So like I'm going to bet you that if you looked back at, if you had like actual real polling back in the independence era, that you would see that the majority of Americans at the beginning would not have favored independence from England. But there was a small minority, maybe a quarter to a third of the people that did. And there is a certain threshold, they've done studies on this, there's a certain threshold at which if an idea spreads to enough of the population, its spread like accelerates, and it's at that point it's almost certain to spread to the majority of the population. So, and I think that this would be one of those cases where if they did if they tried to implement a nationwide lockdown, not a recommendation, but like a straight up nationwide lockdown that they're forcing everybody to enforce, even the governors that refuse to do it. And like the governors refused to do it and they stepped in and there was a fight over it. I think that would be enough to push people over the edge. I guess I should be careful about how I say those sorts of things, but that's kind of the way that I see it playing out. Well, they since the sell here is kind of chilling. So I'm thinking that we got 20 minutes. Maybe we could get a trade in before Yellen. But I don't know. Okay, so there you go. They both stop out. Why start being... Because Biden's president now, bots. That's why. And the enforcement, I mean, I've always tried to toe the line, but careful to not say anything that would explicitly break YouTube's rules. But the issue that I have now is that I don't believe if I explicitly follow YouTube's rules that I'll be safe. I think that I can come in and I can say things that are factual. I can say things that are nonviolent, but are still against what the administration today wants, and they could come up with an excuse. That seems to be the way that they're going, because I really don't see what rule Ron Paul broke to justify banning him from Facebook, for instance. So, like, you know? So if I'm talking about a situation where you could potentially see, and all I'm saying is I think that Texas would try and seat from the union is what I'm saying. So I'm being very careful to say I'm not, like, saying that there's going to be a civil war or encouraging a civil war or anything like that. I'm just suggesting that there are certain policies that even Biden would maybe be hesitant to implement purely because of the disastrous political consequences it would have. I hate apples. Bananas are better. That's hate speech. Uzi. Yeah, one or two spite monkeys who troll channels can slam me with complaints on YouTube and cause trouble. I rarely see robot YouTube moderators appearing on channels during live streams. Well, you know, we've had our channel hidden from search before, right? We had a video about the fire in my local area that was really... Oh, no, it wasn't that. It was about the earthquake. We had the video about the earthquake, and that was really successful. And because of that, YouTube throttled our channel and removed us from search results for like 3 weeks. Simply because we did well. Because an earthquake happened during the live stream. Can you believe that? So, yeah, I can't say that I have 100% confidence on anything. You know what? The funny thing is that YouTube sends a lot of surveys about this. YouTube sends a lot of surveys about this. So it seems like there's a part of YouTube that's like cognizant about it and is trying to fix the problem. But then there's another segment of YouTube in particular that just wants to censor people. Because there have also been a number of far right leaning YouTube channels. Some of them I think totally deserve it. But I think that there are some that have been unfairly. Why so many troops for a virtual inauguration? I don't know, man. Here's the thing: is there was a bunch of warnings and concern in the media over protests at capitals across the country over this last weekend, and people showed up for them, but they weren't really. It wasn't really a very significant number of people, and in particular, all of the Donald Trump outlets that I monitor are straight up telling people to not go out and protest. So they're doing the same thing that they did after Charlottesville, where they're trying to say, oh, this wasn't us. And because we believe that it wasn't us, we need to make sure that everybody stays home so that they don't have any excuse to try and blame anything further on us. So they literally are just staying home. And nothing's going to happen at the inauguration. Maybe there might be a dozen guys that will come out and protest. And I don't think that let me put it this way, anything that does happen at inauguration won't be as bad as the violence that we saw around the inauguration when Donald Trump was inaugurated. So I'm not quite sure what it is that they think that they need to have that many troops there, but I'm going to guess that they're probably just overreacting. You had a customer cancel for tomorrow because they're going to watch the inauguration? Really? Jeez. Now, the other thing that I think is kind of interesting and funny about the inauguration is not what's going on with the inauguration themselves, but apparently Biden and Harris are like scheduling a bunch of other inauguration events too, which I think is kind of weird. I guess that's the liberal way, though. You got to remember that to liberals, optics are everything. Because propaganda, I'm going to call it propaganda, but I'm going to say because liberal people themselves tend to be prone to following the crowd for popular culture, they think that everybody is like that. And so they put much higher emphasis on managing the narrative, and therefore they want to have all these events to celebrate Biden being president. That was actually something I think that was unique about the Donald Trump movement, though, was I think that the Donald Trump movement kind of picked up on that. And so they started to try and use the same tactics. And that's part of what made everybody so mad. Yeah, it was a good short in the end. I'm not. So this kind of goes into some overnight positions. So I'm not to the point where I'm like, oh, this is really strong, it's going to trend all day. Seems like when I say that sort of a thing, though, is when it surprises me, you know? I'm still kind of keeping an eye out here. Goldman Sachs erases opening gain of more than 1%. Okay. So there could be something going on with some of the earnings that maybe there's some reading, more nuanced reading of some of the earnings that was released this morning that makes the market less prone to buying. Certainly, we have to say after that downturn that it's hard to buy. Indy took a long there, and look, it looks like he's going to get. Looks like he's going to get hit. And it'll be forced into every streaming platform, probably. Yeah, you know what's one of the funny things is that, like, remember that whole thing about, okay, not as many people went to Donald Trump's inauguration as Barack Obama's inauguration, and there was some reasons for that, but then they ignored all of the online streaming numbers, which were just like amazing. And then I bet you that this time around, since nobody is going to be there, there's going to be this huge media narrative over the next week about how big the online streaming numbers were. And I think that Uzi is probably right. I bet you that we're going to get on the TV, we're going to go to the YouTube homepage tomorrow, and it's going to be actively promoting the inauguration, which they did not do when it was Donald Trump. We had to search for it, and we can, because I remember watching it. In fact, I think we were streaming at that time. Could be wrong on that one. What platform would you recommend for a beginner living in the UK? Would this mean I would have to be up at 4 or 5 a.m. in the mornings just so I can trade when the market opens in the US? Well, okay, so first of all, the market opened 20 minutes ago, and that's not 4 a.m. That's like, noon, or no, that's like 3 o'clock in the afternoon in Europe. So that's the first thing. Second thing is I have a video called "What is the best futures trading software platform?" and I use Jigsaw Trading for my execution, and I use Ninjatrader for programming and charts. And that's what I recommend. And I do recommend trading with order flow. Well, that was something just hit my house. I don't know what that was, and I'm just too scared to go outside and brave the wind to see what it was, but something just blew into my house. Did you hear it? Absolutely nothing will be questioned for the next 4 years except by institutions decried. Well, so I'm not so sure that that's actually going to be the case, Susie. Is it possible to use Jigsaw without having Ninjatrader? Yes, it is. And Jigsaw has its own charts now. And as long as you're going for standard indicators, you've got everything that you need. The reason why I continue to use Ninjatrader is because I program, and I have robots that I'm testing and all of these other things, and I want to continue to do that. Okay, so to Uzi's point, here's the thing. The far left is going to hate Joe Biden. As much as he is going to try hard to appease them, or at least at the moment it appears that he's going to try hard to appease them, I guarantee you they're going to hate him. They're going to be pushing the, Joe Biden is actually racist. They want full-blown socialism, and he's standing in the way, and they're going to say, like, controlled opposition sort of a thing. Well, the same way that the conservatives do. And the media is going to play into that, because the ultimate goal for the media is to make money. And the media will make more money by playing into that for the far left than I think they will just, sucking Joe Biden's dick the whole time, or however you want to put it. Because honestly, if all they do is just kind of toe the establishment line, who's going to watch that? They're not going to make any money. So I think that you will have, I think that this administration, I hope at least, that it will be held accountable more than past administrations have. At least I think it will be held accountable more than the Obama administration was. We got like 5 minutes to Janet's speech. I'm kind of wondering, do I need to, or should I go out and check? Your normalcy bias is strong. Well, I don't know. Perhaps I have that opinion because of an internal bias, but I would ask, I would ask you to make a logical argument as to why this scenario that I just laid out won't happen. Uzi says past performance is not indicative of future results. It's not necessarily indicative of future results. But let's back up a second. And so here's the question that I'd ask you. How will the media remain relevant and continue to make money if they just kowtow, to the administration. Do you think an antivirus is necessary? I'm super paranoid, and I would absolutely never run my computer without an antivirus solution. I prefer Nod 32, both because they have performed very well in detection tests, and they have a different architecture that uses more RAM, but less processor cycles, so have less of an impact on your actual trading. So that's the one that I use and would recommend, Nod 32. NOD 32. They remain relevant by focusing on the Benyon, like I said, new shoes, dogs, select. But here's the thing: is like, think about how much money they made talking about Donald Trump all the time, and now they're not going to have that. There's not going to be as many hits. They're going to have to find something to keep people interested, and talking about dogs isn't going to do it. Yeah, good job at Ace on the short, but you got lucky that it ran. We still don't know why it's short, so. They'll make less money, sure, but they'll survive without that they did before. Well, but I guess my point is that it seems to me that the profit motive, that they just can't help it. They will always be looking for whatever they can to get the most hits. And what I'm saying is the thing that's going to get the most hits is being antagonistic towards Joe Biden. Because here's a situation where you get, if you're antagonistic towards Joe Biden, you'll get all of the conservatives to watch it, and you'll get all of the far left to watch it. And the only people that will, be like upset about it and not want to watch it are like moderate old people that have no clue what's going on. You know what I mean? Like, you don't care about the why. I think it's an important thing to consider. So here's the thing. So we should switch over and we should talk about this again. Okay. The contention is that because of the market cost of making a transaction, you buying and then subsequently selling, essentially makes it so that if you are just taking a random trade, you will lose money. You will lose the spread. We should only take trades if we have a predictive signal to justify that trade, which means that we have reason to believe that the future order flow will behave in the way that we think it does because of some signal. So we backtested Ace's signal, and that signal is not necessarily a predictive signal. The main reason that he makes money is from letting them run. Right? So here at the moment, if we have order flow going against us, do we really want to, and we don't know why that is, do we really, really want to do it with it? Not unless we have a predictive signal. Now, I do potentially see this moving up a little bit more, and I might have one of those. Let's see here. Let's see here. Dollar's kind of being interesting. Oh, do we get the video for Janet? That's the first thing. Okay, so it's supposed to be starting, but Yahoo Finance has not started their stream yet. filter live. Okay, there's Reuters. Okay. I'll just keep that muted for you guys for now. Okay, so they had a pretty good pullback. They didn't quite make it to the ATR stop. They're turning back down again. Does not use less CPU. It will use less CPU cycles than Kaspersky, but it will have a larger memory footprint. Yeah, I would go and research. I would go and do a Google search because it's something that there's always somebody reviewing it out there, and you can see the most recent data for it. But now, man, you can hear it outside now, can't you? No, I can also hear the stream, but okay, is it going to go down again, huh? Maybe. Need to come back here. Should look at some spots. Okay. Interesting. I must have. No, I don't have you on ignore. The bots came in and was messaging me yesterday. I think he wanted to talk after the stream, but I was like, I left and was doing other stuff, and I didn't see his messages until like I went to bed. So we went over to my parents' house and had lunch almost right after that, and then we spent pretty much the whole afternoon cleaning up the basement. So collecting toys to get rid of. You're having a wind advisory today? Yeah, it's crazy windy out there right now. For me. We're getting another one of those storms where as the clouds go over the mountains, they cool down, and then that precipitation just kind of floods down, and it really gives it speed, and it comes down the mountains because it's so cold. The air is so cold that it just... We don't normally get these in the middle of the winter, but... Okay, so that one... not quite filled. Cool. I would only got that on one contract. I would have liked to have caught two contracts and let it run, but given the current situation, I don't think that I really need to, especially since I've caught two good ones in a row. Yeah, I live in Utah, yeah. I live in Davis County in Utah, so we're up where the winds end up mattering. It doesn't happen over the Salt Lake portion, but it happens over here in Centerville. And as of late, I mean, I remember big windstorms when I was a kid and everything, but as of late, some of them have been really bad. So I think that we could. Do you think that we caught a sufficiently predictive signal on that last one? I think that one was probably pretty optimal because we did get order flow that gave me a really clear indication that it was possibly going to turn. And we were having a downturn, but we had already had a pretty big recovery once, so that kind of helped. But the larger market still is kind of overall trending down. So not only were we able to find a signal that I believe would be predictive, but that the market at large might miss. I heard there's all these get-rich-quick schemes being peddled by options instructors in Utah. Well, I haven't seen any such thing. Wind gusts up to 65. Well, last time around, remember last time I was talking about this, we got 90. So we were getting hurricane winds in here, yeah. So it's pretty nasty. I'm not going out there. Oh, by the way, in the Treasury, we haven't really been paying attention to that, but they're still kind of down on the bottom and haven't really been going anywhere. So it seems to me like there was some sell side demand up here, but that when we get down into here, there's like some trade and it's not necessarily significant. Although they have traded 70,000 contracts at 23. This area kind of looks more balanced. This doesn't look to me like sellers are like really trying to push it down through here or anything like this. It just looks like they've accepted that price at 23. So I think for me to want to take a trade in the Treasury, I would need something to give me an indication that they're going to move away from that balanced position. Are you guys all from me? Well, just me and Ace. And there was somebody else that was from Utah. I don't know if they're here. I don't remember who it was. The Nopers are only Furus. What the heck? Okay, well, whatever. I haven't seen a strong number of people in Utah talking about trading topics. Otherwise, I would be there giving my 2 cents. Will it give more speed if I switch from Kaspersky to not? Well, hopefully you're not CPU pegged, but overall my experience has been better with it, yes. So I remember running Norton. It's terrible. Oh my gosh. I did Norton and I did adhere and I did a couple of other free ones. And, you know, there's issues with them. This one I use not 32. Don't really notice that it's running, but you can see that it's running when you pull up the task manager. Although I guess the one that's really big is malware bytes. I don't even know where it's showing up. Maybe if I sort by name. Oh, there it is right there. ESET service, so it's using 0.1% of CPU. There are only very few people who trade for a living, much less talk about it openly. Yeah. And the one of the things that I find comes up over and over again is that most of these guys that we have come in here that do trade for a living also have other sources of income. So I think that's the big issue with the trading thing is that even if you're good and you can make a living off of it, it's not consistent, man. Are you going to be profitable every month? No, that's kind of one of those things you got to consider. Okay, well, I caught that last trade was pretty good. They're touching these lows again. Do I got so somebody going short here? No. One of them is taking it. It's Indy is taking it again. That one might actually be a good trade on it. Not just Indy, but Joseph took it as well. So Joseph, I guess, must be saying that this was a turn up in MACD. That's maybe why that one came up so strong, and now this is the next turn down. So it's trying to take it. You've been trading forever? Well, I wouldn't expect to get rich from trading, guys. Even if you do well, you're probably not going to become a millionaire from scalping. Was it MACD? I think it's MACD. I don't 100% remember. But this trade, that trade is based more on the swing, based more on the oscillations. Like it has a signal, and then it waits for an oscillation. And I wouldn't necessarily consider Joseph to be a predictive signal, but it has been predictive in this market regime, post-pandemic. So. Also, I haven't been trading forever. I've been trading futures for about 4 years, and in the larger scheme of things, that apparently is not that big of a deal. Okay, it sounds like the confirmation hearing is starting. I want to make 6 figures this year. Well, so if you have a big account, I suppose that 6 figures from scalping could happen. That's going to probably put you in like the top 5% of traders. But that's not necessarily rich, is it? Listen, if you want to make 6 figures, go back to school, get a computer science degree. Okay. Curious about this VWAP here. We're in grass lead pushing against the taxes right now on the stream. Would you guys like me to turn the Senate hearing audio on for you? She hasn't started speaking yet, so I haven't turned it on yet, but I kind of hate this game with the politicians. I don't really care what Chuck Grassley's opinion on taxes is at the moment. I want to know what Janet Yellen is going to say. So I'm going to try and pay attention over here really well. I'm not going to turn you guys on read because I want to hear Grassley here. I guess I'll turn this on for you guys. Nobody say anything, but I will turn that on. Oh, you can't hear it. Well, I'd have to go and fix stuff, and I don't want to do that right now. So I guess you can't. I guess you're not going to hear it. I guess you're just going to have to pull it up on your own. Okay. Okay. So it's pretty slow down here now. Okay. Looks like they might go for a new low here. Had to work on my internals more than my strategy. Even with a good strategy, you need to trade well, and that is easier to say than do. When you say internals, you mean like the psychology and stuff? Oh, I guess the Democrat guy gets to give his speech now. Ugh. The Democrat is trying to blame it all on Donald Trump. This is the X time that the Republican leaves the economy in ruins. Yeah, it was all the Republicans' fault that the pandemic happened. The stock market is at an all-time high, but the markets are in ruins. Can you post the link? Here's the one that I am using. I'm watching it on Reuters. If you just go to YouTube and you search Janet Yellen and make sure that you have the live filter set on, you'll find a couple of options. So do you see it here in this profile right here? Just got the power hit. I'm going to give it a minute or two to come back, and if it doesn't, I will exit the position. The baby is upset that the lights turned out. Well, they might just stop me out here. There is a good amount of volume trading in the 75 area. The way that this Democrat is characterizing Janet Yellen's tenure in the Federal Reserve is certainly not the way that I looked at it. He's saying that Janet Yellen completely changed the way that people look at the economics and said that your guys are too focused on the inflation and this and that. And that is not the way that it worked. I could see that being the case if you were somebody that believed in modern monetary theory or you just wanted to push deficits. But that is not what happened. They went through, they followed the same models that they've always been following, and the model said that inflation was a greater risk, and so they kept interest rates low, and that was correct. I mean, I still think she should be confirmed. I think she would be okay at the Treasury, but the narrative that this guy is selling is not correct. It's not what happened. Well, I was hoping that because of the issues with power last time around, that this time around the power wouldn't be so bad. But the power has, as of yet, come back on. I didn't hit on women. I hated on modern monetary theory. I said that Janet Yellen was a good candidate. So, we got the UPS going and we're still fine. And I think we're fine for 20 minutes. But this, I think, this is why you shouldn't trade without one, guys. Can you imagine if at the moment I had to be on the phone with a broker to try and get out of a position or something? Well, I guess if I do get that, then I need to exit because of the power instead of trying to let it ride back up here, which would be awesome. But okay, so here's where we couldn't see it, right? Demand looks healthy here now. Okay, so there was a stop run there, but it came back very quickly. Looks like the demand is still there. Guess I should be drawing it over on this one, huh? You see the amount of contracts trading there? There we go. Okay. So now that I'm not in a position, I have to worry about it. So what I'm going to do is I'm just going to keep streaming here, and when it dies, it dies. I think that we should be able to keep going for about 20 minutes, though. This guy is saying, oh, we need to tax wealth like work. And I just don't think that changing taxes is going to fix anything. I don't understand why is the Democrat narrative? Why is the Democrat narrative always the rich people make too much, so we need to change the tax structure to make it fair? Instead of saying, why don't we make it easier for you to make money? Why don't we make it easier for you to be productive? Why don't we, you tax that guy, it doesn't mean that I make more per year. I do think this could keep going. I would still be in this if I would have taken that one. Maybe I would manage to stop to bring it to break even. But I think I'd be holding this and on the expectation of the full 10 points or whatever that I can get off of it. 15 points. Okay, you guys got a couple of comments here. What are you saying, Forever Real? I did that for years. I had to call my broker to put in the order at the time. That was good technology. Yeah. They would even call back with your Phil crazy days when you think about it. Oh, that's terrible. Yeah, tax corruption, not the rich. Tax corrupt the politicians. Exactly. It's like, this is the thing. You understand the net. What is the net effect of taxes? Yes, you get more benefits. No, you don't make more money. Yes, politicians get more powerful. And what is the strongest of those three? Politicians get more powerful, guys. If you feel that Washington is corrupt, if you feel that politicians do not act in your best interests, that they act in the best interests of large corporations, then giving them more money is exactly the wrong way to go. Because that just makes the politicians more powerful, and that gives them power over more money that they can then use to enrich their buddies. Tax fat and ugly people, no more Aw. You know what, Gary? At the very least, I have to commend you for volunteering to take one for the team and pay more higher taxes because, you know, most people, I myself, not so generous. I pat good tax on my smokes. F off. I tell you what, that's one of the subjects that we don't talk about because I don't really know a whole lot about it because I just don't have the experience. But it seems clear to me that there's definitely a relation between traders and smoking. Because trading is stressful, and it seems the way that most people deal with it is smoking. Okay, let me check and see how much more time, because it should tell me readout on the thing. I guess I'll go talk to my wife and check on her. Oh, it might be that that the lights are on and it just was like a power outage. Let me, hold on. Okay. So that fixed that. I guess the power did come back on, but I didn't notice it immediately because those lights are LED lights and didn't turn automatically back on. So I suppose I could try to get back in. And bot says I managed to get my 6 months smoke free on January 8th. Looking forward to my 12th month. Yeah. At this point, all you got to do is just not do it because it takes 10 days to establish a habit. So if you can get 10 days doing the thing, being consistent with something, whether it's waking up early or not smoking or eating better, you get past the 10 days and like you're over the hump. So for an additional trade here, I don't think it makes sense. Maybe if I got it back down in here again. I have to say, the market action here is really tight. the way where I got my initial entry makes sense, because I'm not going to move my risk if I take that to be like it was on the original trade. Oh, I actually got out at 81. But, where I got in at is a much better spot. And so if this runs, then we'll just let it run. But man, now we gotta sit and listen to another senator talk. Ugh. Isn't that what Senate confirmation hearings are, right? No, everybody wants to hear Yellen. Listen to all these rich people pretend to give a crap, right? Well, I think that these guys are being honest, but I mean, they believe the things that they're saying. I just think that, especially when it comes to these taxes, that you really have to think about what the politicians' own interests are. Never be ashamed of proclivities. I only have one. You mean like negative proclivities? Key to success: don't fear regime change. Find out where they're putting their money by decoding their policies and follow. Yeah. Well, here's the issue with it, with Joe Biden in particular. I think that this kind of an attitude was really effective when Donald Trump first took office, but there's a couple of confounding factors that make this strategy particularly difficult to carry out with the Biden administration. The first one being that the markets are already really high, and a lot of companies by traditional valuation metrics are high. That really causes an issue, right? But I think that the issue number two is that many of the best trades that you're going to get from a Biden administration aren't going to be available to the public, right? It'll be just like with Obama. They want to put money into green energy and make energy more expensive so that people don't drive as much and so forth, right? So there are some green energy companies that could maybe get some help, but the chances are that most of the companies that are actually going to get money from the government because of these policies that they want to put forth, assuming that they actually get the policies they want, they're going to be like private companies, So unless you have a way to get into non-public companies, it's going to be really hard. You have seen like the overall energy, the green energy market move up, but green incentives will be given to existing large energy companies. Yeah. You just think about it when it was in Obama, like Solyndra. Did you invest in Solyndra? And then that's the other split side, is that the government giving them a lot of money, it gives you like a temporary thing, but not a long term. Because often the propensity is for these new companies to just waste it. So it may still work, but I just think that it's going to be overall a more difficult edge to exploit with this administration. If they pay dividends, that's what I'm looking for. So do a REIT, I guess. Cold, go do get Gary Rich's Colts. I think that they've come back a little bit and might be in an okay buying place. We should go and check. No, I'll do that after stream. I don't want to, because that often kind of screws up the CPU. Okay, so now Yellen is talking. And well, we got 45 minutes left. Oh yeah, I'm still thinking about Gary saying proclivities, and I was thinking, I don't know. I don't think that any success has come from in my life from just going along with what I feel like. That it has always been fighting against being lazy where I've had success. I think it's really easy in trading to come in and just kind of click around on how you feel like it and think you're trading, and really the end result is that you're taking random trades and you're never going to learn anything. Versus when we, like we have holidays, right? What do? We do back testing. We try out new strategies and we try and find out what the statistical properties of those are. And we research about the market so that we can try and make predictions about what the future order flow will look like and what kind of strategies will be best able to take advantage of those flows. And that's a lot of work, right? It's easy to be lazy in trading. So it's like in streaming, it's easy to be lazy streaming. Like a lot of streamers, they just come in and they just play their game and then that's it. And those people have a hard time growing and being competitive. As men, we have to be at least one of three things: rich, good looking, or useful. You know what? I see a lot of that stuff on TikTok. And every time that I watch it, I'm like, well, yeah, but if you're a traditionally inclined person and you dated traditionally and you start a traditional family, then those things aren't the same problems. I mean, I guess you do still want to be good looking and useful and rich. You have a better chance of getting married. But when everybody's trying to get married young, then the vast majority of you will get married. And as long as you're not, well, then there's still the divorce issue, and that doesn't really make you immune from the divorce issue, but it makes it a little bit easier. Yep, when you start a trad life family, lose your usefulness and see how long your family stays together. Nah, she's in it for the long haul now, so if I lost my job, she would stick it out. In fact, she would be like, well, this is good. We'll probably make even more money now. So probably her attitude. I guess maybe I'm not one to speak because apparently I am somewhat useful. Probably should have tried to get back in at 81. Right there. Dude, when I listen to Chuck, tell me if you get this too, Ace. When Chuck Grassley sounds like a general authority, he sounds like somebody you would hear talking in conference at LDS conference. Dude, does your wife want a dude who sits around the house unemployed? Yeah. So here's the thing. When I got let go from Goldman Sachs, they gave me 6 months of it was a long time's worth of severance. And then they also enrolled me in a program to spiff up your resume and all of that. Which, by the way, was amazing. I keep that book. I have that over there from Lee Hecht Harrison. If you ever get the opportunity to go to Lee Hecht Harrison, man, take it. It is amazing. It made such a difference. I got in, I waited like 6 weeks, I think, so that I could go through that. And I'm sure glad that I did, because I almost definitely got a better job from doing that. And then when I was done there, I put my resume out. I got contacted by a recruiter, and I was in a new job within a week. And but there was that 6 week period, and my wife admitted that she kind of thought a couple of times. We weren't married yet, and it actually made us a lot stronger, because I basically spent a lot of time with them that summer. Like, the kids were home, and we basically just chilled every day. While we waited for that to go through. And I mean, if I wasn't getting severance pay and everything, maybe it'd be different, but she kept telling herself, oh, he'll probably get a better job. And I did. So what do you say? I don't know. So I guess I haven't really experienced that thing where it's like you're unemployed and you go like months and years without having a job, you know? Yeah, I work a day job currently. What was your job at Goldman Sachs? So I did technology. I didn't trade. I should make that abundantly clear to you guys every time, because I feel like there is definitely this prestige to, you've worked at Goldman Sachs, and you can certainly, I mean, there are people that have built their whole post Goldman Sachs career off of the fact that they worked at Goldman Sachs and they were a trader there. Like what is his name? Anton Creel or whatever it is, right? And that's not me. I did technology. We were in the area of exchange connectivity for equities. And the specific areas that I did stuff in was, one, building systems that the QA people use to verify the flows worked the way that they do. So from that, I learned a lot about how the internal flows work and how they route orders to different exchanges. And then the second half of my time there was spent managing the risk control systems that, would go in and, stop you from trading if you reached your risk limit. So I know quite a bit about those systems. By the way, if you want to know, like, how do they manage risk? Well, in those particular instances, there was a hard monetary limit. Nothing special. So that's what I did. I worked here in Salt Lake. They have an office in Salt Lake. I had like one time I would go to New York maybe once a year, and one time when I was there, I spent an afternoon where I was able to talk to traders, and I learned a few things. I don't remember a whole lot about it. The big thing that I remember from that, though, was that any kind of technical analysis, the things that a typical trader would ask them, they don't know about, because they don't. Those things aren't relevant to them. They're not looking for a predictive signal. They just know they're market making. They know that they have a client that wants to purchase a certain number of shares, and they know the most efficient way to execute that order. And there is a lot of scholarly research on that subject, and it's completely different from what we do as retail traders. So that's why I always kind of say that. But I liked working there. I wish I could go back and talk to some of those traders again and ask them questions, because now I know so much more about the efficient execution problem and market making strategies and stuff, that I would really like to go back and ask them things like, okay, so what are some things that you think would be helpful to retail traders? And also questions about the treasuries, things that impact treasuries that I might not know about right now, Anyways, that's what I did there. Well, it doesn't look like I'm going to get my... If I get right there, I might try and take it, but... What do you think about trading ETH? Well, I really think it's easier to trade in high liquidity. But the advantage you get in the ETH, there have been stronger moves during that time lately. There, today being a good example, they moved up really strongly overnight, and then since the regular session, we kind of come down a little bit. And I think that a buy there probably doesn't make much sense. So let's see here. 1, 5, 5, 10. A buy might make sense, but I think that we might want to wait a little bit longer. I think that we might want to wait until like the top of the hour. I think Kai Whitey worked there too. His stuff was junk, but he made a lot of money selling his order flow platform. I don't know who that is. Poopy Headface says, what is the most efficient way to buy sell blocks of 100 million or more? So what you want to look, here's the keyword. I'm going to give you the keyword. Here's what you want to type into Google. Algrim Chris. Sorry, how do you spell it? I don't even know how to spell it. I searched everywhere to see if anybody had ever made anything with that related to Ninjatrader, but I don't know if it's really pertinent. ALMGREN-CHRISS. That's what you want to research if you want to learn about that. This is, they have more sophisticated models since then that are not going to be in the public domain, is my understanding or my recollection. Because I didn't know about Almgren Chris at the time, but I know that the one of the people that was involved in creating Almgren Chris actually says that he doesn't use it anymore. But it's the basis, It's like you need to understand. That's the first thing there, right? And when they made that one, then it would like opened up this whole new world, and there's been tons of research since then, right? Algram Chris. And the basic gist of it is this: if you are risk adverse, you're going to front load your trades. So they're basically able to look at, okay, based on what you expect the overall trajectory of the markets to be and what your risk aversion level is, how you should schedule your buying and selling for optimal execution to minimize the impact of your trades so that you can make the most that is possible from the actual trade itself. Which is to say, this whole thing about you're buying and then you sell, you're buying it and then you sell, and you get this thing where your sells after that have a larger impact than your buys, and so the net impact of your trading is the spread and you lose money off of it. Unless you have an actual you're actually informed, you have a predictive signal that suggests that other people are going to come in after you and also buy, and they're the ones that are going to lose money for when they try and get out, and you make money, from here. That makes sense. The picture probably confused him more, but also another thing I want to point out is if you buy, the impact of your trades will affect the market for longer than it took you to execute the original trade. And there's ways of calculating this, but I'm going to say that for our purposes, you can just say it's by a factor of 4. So it'll be like this. So if we just saw a market that we just saw some like really heavy buying, and we think that buying is over, we might not want to try buying again until it's been 4 times the amount that the buying was. Makes sense? Anyways, Almgren Chris, that's where you want to look at efficient execution. And those are the sorts of things that those people over at Goldman Sachs are so good at. But the usefulness to us in day trading, you would basically have to find some inefficiency in that and exploit it. How do you spell it? Let me do it again. ALMGREN, Chris, CHRISS. So Alm, ALM, Gren, GREN, Chris with 2 S's, CHRISS. And the very first result that you will get is the 1999 paper, Optimal Execution of Portfolio Transactions, where this idea was first proposed to the academic community. Free PDF. You should read this. Oh, yeah, you know what? When you post a link, it should show up correctly. There's the link. Just click that link. It's like there's some guy over at some institution right now. Seth, no, don't tell them about Holmgren Chris. Stop. What's your trade today? You're depressed. Oh, I'm sorry, Sugar Daddy. Hopefully I've been entertaining enough to give you a little bit of a boost. Robert Almgren? What is his first name? Robert Almgren. One of the senators is trying to whisper and you can hear it over the feed. I think that is him, yes. Almgren is an applied mathematician, academic, and businessman focused on market structure, microstructure, and order execution. He is the son of renowned Princeton mathematician Frederick J. Almgren. With Neil Chris, he wrote the seminal paper on optimal execution of portfolio transactions, which institutional investors said helped lay the groundwork for a rival price algorithms being developed on Wall Street. In 2008, he co-founded Quantitative Brokers, a financial technology company providing agency algorithmic execution in futures and interest rate markets. He is currently chief scientist at QB and a visiting professor in operations research and financial engineering at Princeton University. I guess then what we need to do is financial engineering at Princeton University. Yep. That's the one. We should find this guy and see if he's willing to talk to us. Maybe. Wait. I got the gears turning. I mean, it's worth a try, right? What would we say? What if I find contact information for him, though? What would I tell him? Well, there's his LinkedIn. He worked for Citigroup. Oh, that's interesting. Well, I don't see like a personal website, but there is his. Oh no! Wait. Wait. Nah, that's somebody else. There was another guy that died recently, but it's not him. He says long here. I mean, now that it's been long enough, we could potentially take a long in this area. Yeah, I think if I could get 81, I would be happier with it. But I feel like for me, I mean, here's my trades that I took today discretionarily. Oh, we should check our robots. What did the robots end up doing? The robots are still long. It doesn't look like the robots will undo the damage they did to the sim account earlier today, but I feel like that this is pretty good, so we should. I think I'm just gonna sit on that unless it gives me like a really good opportunity. If I were to get 81 though, that would probably be optimal. Unless I get 81 off of someone bad informed, off of toxic flow, and I want to get out, of course. Did you program the robot yourself? I did. And they're still in testing, so what was I saying? I think I had found, I'm not quite sure what I want to do with Indy. I think that if I incorporate level 2, that I might be able to fix Indy. So Indy is overall profitable, but he really takes it against the trend a lot. And well, yeah, there's a couple of things we could do to possibly fix it, but I might try a higher time frame thing. So I was trying like a 50-minute moving average for my higher time frame, but now I'm thinking maybe I should go back and make it 200. Okay, so Ace got it at 83.25. I'd sleek like a robot that makes me money in your sleep. Well, here's the thing. There's the trades that the robots took today. And there's the trades that I took today. Just note that these robots are taking them in the ES and I'm taking them in the MES. So times them by 10. I made $700 essentially, and they have lost $400. So this is the issues as I keep going through, and it always seems like my own performance is better than the robots overall. But this is the first time that I've taken the robots as far as I have, and I actually do think that there might be enough to these ones that they might be worth taking live. We'll see. I'm going to let them run for at least a month. And maybe next month we might put them on an account of some sort. Is Joseph the gay? No, none of them are gay. They're... Joseph is the one that is using oscillations and only goes long. So I should point out with these robots, Seth, the book in Chris' paper is very good. What do you mean the book? They mention a book in there? I knew about the paper, and I've been reading this book of mine. In the spot in the book of mine that I'm getting to, they're just getting to the Almgren crest problem. So I thought I would read that first, and then I would go back and read the actual study. So haven't read the actual study. Crap, that was an ugly little... What did she just say? She's talking about corporate taxes. she is suggesting, okay, so Janet Yellen is suggesting at the moment that there has been a race to the bottom in corporate taxes to attract corporations. And she is suggesting that we can raise taxes on corporations and still maintain the competitive advantage. She's saying that we've raised them so low that we could probably raise them a little bit and get away with it. And I believe that is why the market just sold. The financial mathematics of market liquidity. Okay, well, I could try and look at that. Here's the thing is, so I got this one book, and this one book that we keep talking about has a lot of stuff in it. I mean, a lot of stuff. And I don't know. Oh, this is an expensive book. I guess you can get it on Kindle for $13.25. Wait, why is there different? Oh, you can rent it. You can rent the book through Kindle. But so I'm going to bet that this book talks about a lot of the same things that my current book does. See, they're talking about from optimal execution to market making. So yeah. I think that I might need to read this other book twice, because when I went through it and I'm reading all of the math, I didn't necessarily understand all of the math. That's really hard to interpret. So I think that what I need to do is go back, with the book in my hand and like draw them on the chalkboard and write it out so that I understand why it works the way that it does. Okay, so if that was a move based off of taxes, you could get a significant move. I don't know if it's the end of the world because it's just Janet Yellen's position on taxes, and she is going to kind of go along with the Democrat line. So the impact here might be short term. She hasn't said anything overtly bullish, though, has she? They found you're talking days. Oh, I won't read that one now. It's not pertinent what we were talking about. I fell asleep just reading the title of that book. How many pages is it? It must be a really big book. It doesn't really say in here. I wish it said how many pages it was. It's probably a big fatty. Wow, part of Chapman and Hall CRC Financial Mathematics, which is a series of 53 books. Wow. I've heard of the Jack Schwager book. In fact, I think I might have that on my list already. Well, this one right here, I have to put on my list. Yeah. And put it on Seth's wish list. Look, that's the book that I've got. It's called Trades, Quotes, and Prices. Financial Markets Under the Microscope. I'll just link it to you on Amazon. Oh, do I still have? Maybe I could do the. I'll just give it to you. I was like, I could give you an affiliate link from Amazon, but I don't even know if that still works. Let's see. Let me try logging into it. Sign in. It looks like maybe my Amazon affiliate link got closed or something. Oh, there you go. Oh. So I created an affiliate account. I didn't get 3 referrals within the 30 days, and so they canceled me. Boo. So that means that the what is the best books video was a dismal failure. Anyways. Oh, I didn't give you the link, did I? Oh, no, I did. I did give you the link. Daddy Gary has a library. Okay. Well, have you read all of those? Because I'm, guidance on which one to go for next. I was actually going to read one about using a, what was it called? I have it on my machine here as a PDF. Is it this one? No, that's not it. Maybe you don't have it. No, that's not it either. Maybe I haven't gotten the book yet, but I had a book that was about using using a model to separate the market into a long regime and a short regime. So I was interested in that. I always go back into my library when I'm stuck or can't solve something. Well, here's my question: is if we're gonna go into this market microstructure stuff, where is in something about market microstructure that would be easy to implement in a retail trading strategy? That's kind of what interests me. You guys know you could listen to the audios in the shower or car or improve your reading books, but I also remember busy lives. You always have, yeah. Well, the issue with these ones is I really think these are ones where you have to be able to like sit down and stop and think about it for a bit and read it over and over again and stuff. It's really hard for me to stay focused and read, especially this all stuff going all around. It's like I can't get a solid 2 hours uninterrupted where I can just read, you know? But I do think that I will finish that book today. So I got like 50 pages left. Yeah, I wish I could. Somebody sent it to me. It was, I think AK sent it to me. Let me go back and find it from AK. Was like oh, here we go. This is it. This is the one that I was planning on reading next, but if you can convince me otherwise, if there's something you think I should read, Gary, then I'm all ears. It's called Detecting Regime Change in Computational Finance. And it's basically talking about using a Markovian analysis. This is machine learning for regime change detection. Historical regime changes in a market can be discovered by a hidden Markov model. Regime characterization. Normal and abnormal regimes in historical data can be characterized using indicators to find under directional change. So this seems like something that we could potentially use. That's true. Micro market structure is a wide subject matter. Depends on what one wants to do and accomplish. Let's put it down as we want any information that we could program. One thing is if we can program something in Ninjatrader based off of it, that gives it a big plus. And we want it to be a strategy that has, well, the thing that I would be most interested in is anything that would give us a highly probabilistic signal on a short time frame, as such that a retail trader could take an entry on it with short risk. Something where, you risk 1-to-1, you're taking a stop of 16 ticks, and you have a 70% chance of winning. That's what I really want to find. So if you know of anything in your reading that might help me discover a trade of that nature, that's what I want to read first. Detecting regime change and kind of a subtle sleepy time for, yeah, it is. Well, if I want to go to sleep, I start reading one of those books. Then I realize how tired I really am. Well, they're going to go and sell it down again, huh? Well, I think I played this right. I think when I said, hey, maybe we could buy it here, 81 would be optimal, unless we were getting order flow informed trading against us. And in this case, that's what happened, is we got informed trading against us because of what Janet Yellen said about taxes. So yeah, I guess I didn't explicitly say, oh, you shouldn't take it or anything, but and I kind of didn't have that order out there. Maybe if I hadn't have been paying attention, but I think that if that had happened, I would have hopefully I would have taken a small loss on it, right? If it had gone against me. But I think I feel pretty good about the trades that I've taken today, and I feel that I am implementing at least some of the more general conclusions that are made in that book and successfully implementing them into my trade. So I guess that's good, right? You're short? Okay. Well, if you got short at 78, 75, then you're fine now, right? In fact, that break of the new low would have been a great spot to have taken it off. It's probably going to revert back here a little bit, and we'll see if they go down for another one. It would have to be up to you whether you're going to try and let it ride through that or not. I'd be concerned about this one, though, because something that I'm starting to try and track here, and I don't know if it matters, but I am doing this based off of what I know about on-ground Chris and impacts on the market. And if we have a sell that took place over 15 minutes of solid selling here, really, since that thing happened, then if the selling were to subside, that basically the issue is, if I want to buy, I'm probably going to want to wait an hour to do it, because the market is going to have this memory for the next hour that it's short. Joe Orsini asks, do you not care about the snapshot feature on Jigsaw Wire? Why not? Can you spot icebergs without the snapshot? So it's a good question, Joe. Especially if you're new. So the answer is that the snapshot the things that you can see with the snapshot can be seen without using the snapshot. You're just going to look at and especially in treasuries, you're just going to look at the ticks, and you're going to see, okay, when it ticks up, how did all of these columns change? And if you're good at watching it, you'll get a pretty good idea of how much it changed. The snapshot column is really just kind of a tool to make it easier for you, right? And here again, where I would be, really paying attention is when you see it pulling, when you see it ticks up and all of these guys above it pull their orders because they're afraid of adverse execution all of a sudden, right? That's what the one where I really notice it, right? And that is pretty easy to see on its own. So for me to spend screen real estate on it doesn't really make sense. But I'm not going to say that it's not useful or anything. I think it's absolutely useful. And if you have the room on your screen for it in the setup and everything, I would absolutely include it. Another thing that I'm thinking about is these columns where you can have like a buy column volume profile and a sell volume profile. I think that would be useful because, again, the thing that I'm looking for now, something that apparently matters, is looking for a place where I'm going to draw it down here and so that you can see it more clearly. And I'm going to try and use colors. You will have an area where people want to sell, although you can barely see that. Red, try that. So you're going to get people that are looking to sell like that. And you're going to get people that are looking to buy like this. The people that are looking to buy or sell within this middle location right here have already done so. So there is less liquidity in this area, right? There's going to be more liquidity over here and over here. So I'm going to look at how the market reacts when it gets to the areas where we should expect the liquidity. And I'm not intending this to look like somebody's balls or anything, but and then if you have that profile where it shows you the buying profile and the selling profile, then I would think theoretically that you should see that shape where on one column it'll be like that and on one column it'll be like that. And then what is the central area where there's not a lot of liquidity? And it seems to me, it's really easy to see in the treasuries, by the way. In the 10-year treasury, you will, when you come into that spot where the liquidity is less, it's like really obvious because it's like it'll tick up, and then they won't bid any. They won't bid hardly anything. It'll be like, 500 contracts will bid and then they'll sell it down and 500 contracts are offer. And like it does that once and you already are thinking, okay, this might be the spot where there's not the liquidity. It does look like market profile examples. So here's the thing is that we think, so let me explain this again for you, Gary. You can tell me what you think. So the book, the gist that I get from the book is that they believe that happens because of the squared root law, which states that the impact of a meta order on a market moves with by a square root law that then kind of trails off for extremely large orders. So there's a certain place where, 2 million, a meta order with a quantity of 2 million doesn't impact the market any more than an order that's 1 million. Okay, but anyways, so they're saying that the reason that the volume profile forms is because there's this area where there's less liquidity. And in order for them to actually transact, they have to kind of wiggle around here. And so you get this distribution profile, right? The general theory that I get from market profile guys is that this ends up being like value. I think that on very long time frames, on the order, not very long, but like on time frames of 30 minutes to days, then that profile does end up being an indication of where value is. But when we're scalping, that area is going to show up before the profile is there. You want to be able to see it before the profile is there. And how do you discover it? You want to look for the price that doesn't have the liquidity. And you should see that behavior. You should see that behavior where there's the people that are looking to sell and there's the people that are looking to buy. And in the middle, there's not very much liquidity between them. And then this should develop into a volume profile. And that's also why you'll notice that the volume profile often starts like this double hump. It starts with a double hump, and then eventually they fill in the dome like that, right? So this book is suggesting, I'm not going to say that it's proof, but this book is suggesting the theory that volume profile occurs because of a mathematical property of the market. And I believe the theory that I'm testing here today, or that I keep talking, why I keep talking about it, is the theory that I'm testing is that I can predict where the profile is going to show up based on what I see in the order flow. And I can predict this very early. And ergo, I can also provide me some guides for where would be a more optimal execution location in concert with what I know from the fundamentals about the market. Giggling, I'm howling here. Yeah, because some of them do look kind of weird, don't they? It's boobs. Oh, it's boobs. No. They're very informative. Thanks. Just keep in mind that a lot of what I'm talking about is kind of theoretical. There is some quantitative evidence of it, but I'm not going to say that it's like proven. And probably most of these things you could never really, really prove, right? You could get to a point where it's like there's so much quantitative evidence in favor of it that it's almost not worth questioning. He clearly favors the firm. I totally like I don't get, some people are like, you know, when boobs are like clearly fake, that's so gross, and I don't get that at all. I think that fake boobs usually look awesome. I mean, obviously it can get retarded, but you know, just your standard tastefully done boob job, I think it looks great. And I'll add to it. You see here, these are the controversial comments that are going to get me taken off of YouTube, right? Talking about breast implants. Another thing that I've heard very often from girls is that breast implants are like misogynistic or encourage, enhance the patriarchy because you're doing it because you've been socialized to please men. No. Let me tell you what, from the women that I've spoken to that have breast implants, it is 100% for them, and they like it because of how it makes them feel. You must have empirical evidence to make that claim. You know what? You're right, Blunt. You don't, and you used the right word, Blunt. We didn't talk about this. I spent a lot of time thinking about this, but then it never came up on stream. But this is the word that I think we really need to look at. Is it doesn't make sense to make a trade unless you have a predictive signal. Let's state that again, because I've said it like 20 times today, but I love this quote in the book so much. Because of the cost impact of your trades, you will not make money unless you have a predictive signal for your trade. So the question at that point becomes this: what empirical evidence do you have that setup has a predictive quality. And the word is empirical evidence, which means that you guys can all go and look at this evidence and verify for yourself that this property or tendency actually exists. And then the whole thing is just, is your analysis sophisticated enough? I'm noticing a lot. I'm seeing some other people, since I did those videos where I did back tests and I showed people actual strategies and how they did. I'm noticing other people starting to do the same thing, but their analysis of the strategies are not sophisticated enough. It's like they'll come out and they'll say, well, this is definitely works really, really well, but they've only tested it over a year. Or even worse, they're using just a spreadsheet, and then you don't get all of the stats, right? You got out of that trade now, Ace? Oh, when it started coming back down again? Well, that's good. If you held it long enough. But, you know, this is where I was saying, like, so we're like, we've gone one time period. So this could potentially be for 4 more time periods. I think, though, the issue that we get is Janet Yellen still talking, and we could have continued informed trading coming in. In fact, that might be happening right now. I don't know if what she just said did something. Oh, okay. You scratched out it basically after making money on the one contract. Oh. This is kind of where I feel like that's a situation where I feel like order flow can be the most useful, is like, especially if you know why it moved, then you can start to make really good estimates based on the flow about where they're going to pull back at, and you can get out before they pull back. But the issue with that is that every once in a while you get a trade where the change in the market and the change in the order flow, it just goes way further than you'd ever expect. But in a situation like that, you know, we were able to tell, I think, pretty well that they had made the push down and they were probably going to revert somewhat. And they did. So now we'll see if they really keep going down all day or not. The empirical evidence was Vader. Well, no, empirical evidence would be a DNA test, right? You should build a compilation video and upload it. Oh, the empirical evidence that Vader was Luke's father. That's like, oh man. Luke, I am your father. You don't have any empirical evidence. Okay, well, you know what, guys? It's time for me to stop. What do you think? Should I keep it why you should never trade without a UPS, or should I change it to Janet Yellen confirmation hearing? I think I'm going to change it, because what I'm going to be searching for, you know, a year from now is going to be markets sell on Janet Yellen tax comments, because that's what happened. Oh, you have 300 pictures. I get you. You go make a compilation video of every time that I draw pictures. It doesn't help that a volume profile kind of looks maybe like boobs. I don't know. You know what I think it looks like? You guys just have filthy minds. There we go. You know what it looks like to me? To me, oops, that was the wrong tab. Good grief. It looks like the Homeworld mothership. Right? That's what it's not supposed to be boobs, okay? This is what a boob looks like. Okay, those are boobs. Well, they were like that. Anyways, those are boobs. No, this is the volume profile looks like the Homeworld mothership, right? Do you see it? And there's kind of like this flat part in the middle right here, right? See, this is the area where there's no liquidity, and here's the buying thing, and here's the selling thing. You see it? 4.59. I owe you guys a video at 5K subscribers, and I think I got everything ready for it. So, and I think that some of this academic research that we've been reading will only add to that. So. Oh yeah, I forgot about looking at how to talk to Mr. Robert Almgren, but maybe we'll try it. I will put a feeler out there. Anyways, yeah, that's it. So, oh yeah, I need to tell you guys, as always, if you haven't subscribed, click that subscribe button, and I would recommend clicking the bell icon. That way you will see our channel when we're live. You will make sure that you will get recommendations when we have new videos out, because I know that you might not click on all of them all the time. But maybe you like a new video's out, you sit down and you say, well, I don't watch Seth's videos every day, but if a new video of Seth comes out that interests me, I definitely want to see it. That's why you click the bell icon. Right. Also, you can use the histograms that I have down in the bottom right corner. You can use those, download them for Ninjatrader at speculatorseth.com. Requires a $10 subscription fee to this YouTube channel to continue using them after the 2-week trial period. And make sure you hit that like button if you enjoy this content. I will see you guys tomorrow, 8:20 Eastern time. In the meantime, stay profitable, friends.